Hi, and welcome to our weekly market update with Morton Brown Family Wealth. I'm Dennis Morton here with Katie Brown and Cody Demmel. How are you guys?
Good.
Good.
So we're back. We're back in the office.
Yay.
Cody, welcome to the office. Your story was a little unique over the last 3 months.
Yeah, so I was only in the office 4 days before we had to do the quarantine and working from home. So it is very nice to be back into the office.
So we're all separated out, social distancing in different spaces in the office, which we're able to do, but it's great to have that. We use the we're back line because there's a lot of other things that have seemingly started to creep back, if not to normal, at least optimistically looking toward normal. So Cody, what are some of the things that we've been looking at this week in particular where things are coming back a little bit?
Yeah, so it's great to finally starting to have sports come back, especially in the United States. So this week will be the first PGA Tour event that's coming back. It's actually the Charles Schwab event in Fort Worth, Texas, which I think will be great to finally have some live sports back in the United States. There are some sports in Europe opening back up, like the German soccer league's been up for a couple weeks. La Liga, which is the Spanish soccer league, is coming back next weekend. And same with the English Premier League is also coming back next weekend. So it's great to start seeing things coming back.
And everything seems to be coming back in degrees, that there's this idea that we're going to bring it back, but there's work to be done. There's work to be done on the virus. There's obviously work to be done from an employment perspective. There's work to be done with racial tensions and income inequality and some of the issues that have really been percolating socially recently. And then there's work to be done politically. I mean, we're coming into an election season. So I think there's this overhang to anytime we say we're back, but let's talk about that jobs report last week. I mean, this is one of those things where if we were going to see something positive, that was a really stunning report for a lot of reasons. Cody, what was the number? What was the disparity on what was predicted and what actually came to be?
Yeah, so they thought the jobless claim was going to be around 7.5 to 8 million jobs lost. But it was actually a gain of 2.5 million jobs in May, which was, like Dennis said, a very nice surprise to the upside.
Right. And I think it was the most jobs ever gained in 1 month. And the estimate was off by close to 10 million. And there's, that disparity. It's a reminder that we still know nothing. We're still there's a lot of guesswork and a lot of stuff that goes into this. And we're going to be wrong about a lot of things. But even with adding over 2 million new jobs last month, and a lot of that was employers calling back people who had been furloughed or laid off, so just pulling the same people back into the fold, we still have an unemployment rate that's higher than it's ever been since the Great Depression. Or higher than it was even in the Depression. So there's work to be done and a lot of challenges there. The stock market, though, we're back to within a stone's throw, if not we were positive a couple of days ago, year to date. We're back really close to where we were at the beginning of this year. Katie, you found an article from Schwab's lead strategist, Liz Ann Saunders, that had some great data in it. What did you pull from that?
Yeah. The article was disconnect the dots and the disconnect between Wall Street and Main Street. And because it feels like a very different environment, when we look around us versus what we see happening in the stock market. But she had some really interesting points in there. Dennis, to your point right there with unemployment, we still have very large unemployment numbers, huge percentages of people, unfortunately. And in last week, we even talked about some of those unemployment benefits aren't getting yet to the consumers. But the unemployment benefits that are getting to the consumers, a statistic that she had inside the article showed that 60% of laid off workers have been made more than whole relative to their work-based income prior to the pandemic. And that's from those one-time checks that they received and from that extra $600 bump in unemployment benefits. Another great point that Liz Ann had in the article was that personal savings rates surged to a whopping 33% of disposable income. And at the same time, their household net worth remains at historic levels. And so we look at the unemployment number, but then a lot of the consumers are actually doing okay.
Mm-hmm. Now that kind of has a double-edged sword effect too, because the personal savings rate going high is great, but that also means people aren't spending that money at restaurants. They aren't spending that money, in a typical consumption way. And heading into this crisis, we had a consumer-driven economy. It was that velocity of money, entering the economic system that was driving a lot of our growth and a lot of our low employment. So now we're going to be at this place where how does that money then get back into the real economy where it's being transacted for goods and services? That'll be an interesting development over the next few months as people feel more secure.
Right.
But then she also talked about stock market leadership and how even that's been a fast-moving target over the last couple months. What was that about?
She did a great job of breaking it down into phases, looking at from the market bottom, the end of March up until the beginning of May, kind of calling that sort of phase one. And a lot of the leadership there and the returns, things that we talked about, technology, healthcare, things that people kind of expected to be the leaders there. But then this phase two starting in May, that was more of a normalized type of rebound that we see off the bottom. So things that are considered maybe a little bit more value-based. So we had, industrials, we had real estate, financials. Those have actually been contributing to a lot of this rebound kind of post-May or post beginning of May.
Right. So it's kind of that snapback and transition. You had a 50% decline in energy stocks followed by a 60% snapback. Now you get a little bit more nuance to it. And again, it comes back to diversification and all the benefits. How did that last quote that she had, can you share with that last line, which I think, encapsulates a lot of what we talk about from an investing perspective?
Yes, I love that Lizanne put this in there. I'm going to actually read the quote to all of you. It says, our advice to investors trying to navigate these uncertain waters has been consistent this year. Rely on tried and true disciplines like diversification across and within asset classes and regular rebalancing, trimming into strength and adding to weakness. Keys to long-term investment success do not rely on the precise timing of market tops and bottoms. Investing is and always has been a process over time. It should never be about moments in time. And it completely resonated, and hopefully it resonates with all of our clients as well, because that is very much what we try to instill in our practice and what we truly believe in.
Yeah, I love the idea of process and saying we're not taking this snapshot today and making monumental decisions. So here we are, this is just us talking to you, our clients. This is a private forum for us. So we wanted to share with you, first of all, we're really proud of how you've navigated this, how you as our clients have been very thoughtful, in responding and making sure that we know your concerns. I felt the communication has been really good, and we're proud of the way that you've not only stayed the course, but been, constructive in making sure that we came out of this with no regrets. And now we're sitting here. Where are we in the process now? It's a time for reflection, maybe. If the markets are back too close to where they were, we're feeling a little bit more secure, at least that there's good work to be done to make things better in the future. What are some things that we can do proactively and collaboratively to make best use of what we know now? So, Katie, what's the first thing you would recommend that people do right now?
I think the first thing is, and a lot of this is going to be reflection, but reflect back. During the market volatility, a lot of people had an impact to their job, their income streams. Did it require you to change your plan? Did you need to, adjust where you're pulling money from, how you're pulling it, making sure the income streams are correct? And, did it require a change to the plan? I think that's always an important thing to look at and to then reflect on, was I comfortable doing that?
Right. I think it's also a good time to check your balance. So the second thing is, did you have the right balance of, short-term needs, job security, income, cash security, and then long-term? Because if you're expecting, your long-term money, your stocks to perform the job of your short-term money, there's going to be a lot of anxiety. It's going to create a lot of stress. So it's a good time to say, do I have the right balance of cash sitting in the bank? Now, it's not going to earn much, but that's not its job. It's there to be that safety blanket, that emergency fund, and then everything else can do its job. We build in the idea of flexibility, and that's when it matters. So check on your ratios and make sure you have the right balance now. Cody, the third thing, where did you need support during this crisis? What are some things where we might have found we needed more support?
Yeah, so we're here for you. So obviously, we want to make sure you guys are getting enough support through this. So that's why we're doing these active updates every week, doing the reach out to you guys, like Katie said, making sure we're updating the plans whenever needed. Make sure we understand your risk and make sure we do update that as the time goes on. And we just want to make sure we continue to give you the support that's needed to have that great relationship between the advisor and client.
So if you're feeling as though there are different areas where you might need to be more educated, where, as Cody said, your risk assessment has changed, but you're not sure exactly how to navigate that, let us know. Those are conversations that we want to have. So the three things we want to do at a time like this: reassess how the crisis impacted you uniquely, check on your ratios, do you have the right balance of risk and safety, and also think of where you needed support during crisis and where you may need support now, and let's work together to make sure we can be constructive as we're all coming back and getting used to this new environment. Thanks for today. We really appreciate it. Thanks for all of your support. We hope you've all been able to spend a little bit more quality time, maybe in small gatherings or meeting with people that you haven't seen in a little while. Continue to reach out as we can help you and support you. Look forward to seeing you again next week. Take care.
Take care.